Indies 1 and 4 regulatory deferral accounts. You'll read. The objective of the standard is to specify the financial reporting requirement for regulatory deferral accounts. Balances that arise when an entity provides goods and service to consumer at a price at a rate that is subject to rate regulation. So the deferral account is the entity is providing goods and service to consumer. Yes. But the consumer what they provide a service is at a price or the rate that is being subject to rate regulation. That is, it is to be provided in that specific rate that the government has regulated. We can't provide more than the regulated rate. Rate regulated activity, an entity activity that's subject to rate regulation. What are the regulated? Regulator, rate regulation, regulatory deferral account balance, and regulatory assets, regulatory liabilities, all these things. Regulator, an authority, authority body embedded by the statute, that is government, or by any of the government or any other authorized agency of a government to set the rates that binds the entity or entity's customers. For the entity customer, the regulator. Regulator can be authorized body, government, or any agency that is approved by the government. Rate regulation. It is a form of regulation for setting an entity's price in which rate the cause or effect relationship between the entity's specific cost and its revenues. So they can't sell more than this price that has been set in this regulation. Rate regulation. It is a form of regulation for setting an entity's price in which the cause and effect relationship between entities and specific cost and revenue. So, example, in the case of petrol price is determined by the government. The government says this price you can sell. So, that is what the regulation rate. Regulatory deferral account balance. The deferral account assets or different liabilities. So the deferral account balance can two kind. One, rather the regulatory asset or regulatory liability can be. Regulatory asset is an entity's right to recover fixed or determined accounts for the money towards incurring cost a result of the actual or expected action of a regulator under the applicable regulatory framework. So regulatory asset is something which they going to get due to the service what they render. It regulatory liabilities, the entity obligate an institution to refund or adjust the fixed or determined amount of money as a result of an actual or expected action of its regulator under the applicable regulatory framework. What is this? Example, when you're going to a car dealership, you're buying a car, that will be car will be subject to TCS tax collected, so it will be collected. Then after the amount will be remitted to the buyer's account as per the regulatory requirement. 1% of the total value will be purchased and remitted to the purchaser. Now, what happens if you seeing this, what happens is so asset is being purchased and the amount is being gone to the account. When the amount when they receive, it is a regulatory liability for the entity to remit to government. Yeah, this is what. Then the TCS collected is a liability. Example, second example, GST. When we sell some goods, it is subject to a tax rate. So the tax rate what collected from the consumer to be remitted back to government in the specific form, specific due date. That is specific. That is a deadline. Entity is permitted to apply for requirement of its entity is permitted to apply the requirement of its standard in its first NDAS statement if and only if the conducts rate regulated activities are recognized amount that qualifies as a regulatory referral amount balances in the financial statement in accordance with the previous cap. So the conducts rate regulated activities now. So the NDA is applicable only when this organization or when the entity is applicable to such rate regulated activity. If not, no. A second thing, the recognized amount that qualify as a regulatory referral account balances in the balance sheet. So as per the previous cap, it should be a balances in the financial statement that must be qualify as a regulatory deferral account. If it doesn't qualify as a regulatory deferral account, in the balance sheet, it should not be recognized. Even though to be recognized, it should be recognized in the previous cap too. If not new entity, na, as if it is in conduct of rate regulated activities, na, it should be following this Ind AS. Entity shall apply the requirement of the standard in its financial statement for subsequent periods. If only if the first Ind AS financial statement is recognized regulatory deferral account balances by elected to apply the requirement of its standard. So one when it would be recognized when and only if the first Ind AS financial statement has recognized it. Then after subsequent period need to be recognized. Entity is within the scope of or they have elect to apply and its standard shall apply of all its requirement of its regulatory referral account balances that are arising from all the entities rate regulated activities. Which are the things it's applicable rate regulated this indicates only to the rate regulated activities. This is rate regulatory deferral account balances only it apply, not to every other things. Only so specified thing is indicates apply. Entity that has a rate regulated activities and and is within the scope of to elect and apply a standard shall apply the paragraph 10 and 12 of India said when development accounting policy of recognition measurement impairment e-recognition of the regulated deferral account balance. So when developing the accounting policy, for what they're developing, for recognizing it, for measuring it, for impairment asset, for de-recognition of regulated deferral account, either assets or liability. For this activity, the rate regulated activity, the entity should apply it within its scope of it, and it can apply the standard to any of it activity. Recognition, measurement, impairment, de-recognition. For this, it can apply recognition, measurement, impairment, and de-recognition. On initial application, entity shall continue to apply previous gap accounting policy for the recognition, measurement, impairment, and de-recognition of regulatory referral account balance except for changes in permanent permitted by the standard. So this initial application of gap to be consistently followed as per the previous gap for what policy, recognition policy, measurement policy, impairment policy, de-recognition policy, except if they want to change anything that's permitted by the standard, they can change it. Entity shall not change accounting policy in order to start the recognize regulatory different account policy. So they need to recognize they need to recognize as per the rec- um, regulatory policy for what they having applied rate. So they need to follow the recognized regulated different deferral account balance too. For following this policy, they shall not change any of the accounting policy. For following this, they can't change other standards. Other standards. Okay. Then an entity may not change an accounting policy for recognition, measurement, impairment, and may not change a deferral, regulatory deferral account balance and change makes a financial statement more relevant to economic decision making need for the user, not less reliable or more reliable, not less relevant to the needs. So by changing this deferral accounts, there should not be any change in the financial statement. Such a way, it should not influence a decision maker to make the financial statement less reliable or more reliable, not less relevant. Such a thing should be. It should be true and fair. There should be not any other may only change in the accounting policy that is as per the indication, not outside the scope of it. A specific exception, a specific exception, exemption, specific additional requirement related to interaction of standard with other standards are contained within the standard. And so some change, specific change should be within the standards, not more than the standard. In the absence of any exception, the exemptions or additional requirement, other standards shall apply to regulatory deferral accounts balances in the same way to apply to asset, same way apply to liability, same way apply to income and expenses that are recognized in accordance with other standards. Like other standard, it should be applying, okay? The classification of regulatory deferral account balance, it can be classified as asset and liability. So credit balance and debit balance and credit balance. The entity shall present the separate line of items in the balance sheet for total all regulatory deferral account debit balance, total uh, total all regulatory deferral debit balance and credit balance. The classification of movement of regulatory deferral account balances. Entity shall present in other comprehensive income section of the statement of profit and loss account a net movement of all regulatory deferral account balances for the corresponding period that related to the item recognized in the comprehensive income. So where they are going to recognize the specified rate plans in the comprehensive income, other comprehensive income, other comprehensive income section, they're going to present it a movement of any regulated deferral in the assets or liabilities to be recognized there. Then the separate line item shall be used for net movement relating to that item in accordance with other standards. In accordance with other standard that may be shown, but in other income, comprehensive income, deferral asset and deferral liability should be net off and in separate line item they should mention. And will not be reclassified subsequently to profit and loss account, will be reclassified subsequent to profit and loss account when specific conditions are met. Only when the specific conditions are met, they can be reclassified to profit and loss account. Unless and there's no subsequent change, they can be reclassified to profit and loss account. Entity shall present the separate line item in the profit and loss section for the statement of profit and loss for the remaining net movement of all regulatory different accounts balances for the preceding period, reporting period. In comprehensive income, separate line item should be given, excluding the movement that is not reflected in profit and loss account, such amount acquired. Now, this separate line item shall be recognized from the income and expenses that are presented in accordance with other standard by the use of subtotal, which is drawn before the net movement in recognized deferral account balances. The net movement should be in a separate other comprehensible income, income. That separate thing should be there. Separate line item should be there. Stating the net movement. That is net effect. Disclosure. The entity shall elect to apply the standard shall disclose information that is enable the user to access it. So this disclosure helps the user to identify this kind of transactions. Some rate has been specified by the government that need to be followed. We can see this example in Taskmark. What happens, this bottle should be sold in this price, so the selling price of their goods will never be more than that cost. Always they will be fixing the buying price of the goods from these vendors. And nature of the risk arising with the rate of regulation that establish the prices, an entity shall charge customer for the goods and service it provides. The effect of rate regulation on the financial position, financial performance and cash flow. Nature of regulation that provides the entity can charge customer for the goods and service. So only that rate can be charged by the entity to the customer, not more than that. Same thing. The effect of the rate of regulation on a financial position, a financial performance, and financial flow. So how this rate affects our motion, that is also to be disclosed. That is very much how put on one purchase tag by the government. They're asking to sell it in this price. So I'm only selling in this price so that my profit has reduced. before previous year without the regulation profit is high, and so my purchase cost is being reduced such a way. So through to the fixed set point I have reduced the employment such a way. Any problem you should, the effect of the rate of regulation you need to mention the disclosure what has happened. Second, same thing, the nature and risk associated with the rate regulation establish the price that the entity can charge customer for the goods and service. So these are the goods, these are the services which is provided by the entity, and that price is determined by the government, and there is no change in it. We have sold during this, or sometimes we have violated this rate. If anything violation is there, they need to be mentioned clearly. This is what being said by the standard. Thank you.